Good morning, everyone. This is Group 22 on the Lululemon acquisition valuation for the Walmart. We are a group of analysts. Team Group 22 comprise Arun, Siddharth, Mike, Naresh, Wafa, Chris, and Leo. For the valuation of Lululemon, we had three possible techniques that we tried. The discounted cash flow, we could have used comparable company analysis, past acquisitions, the premium paid analysis. Of the three possible options, we chose the discounted cash flow, in which we evaluated the stream of the cash flows to get a terminal value, as well as applying the discounted rate. Having said the financial performance was evaluated against the peers, we were dealing with many variables. Some of them were unpredictable numbers. To increase the robustness of the analysis, we did perform a sensitivity analysis, multiple beta values, comparison against peers, WACC, premiums, and target share prices. Further, we did the EVA, the economic value added calculations, and examined possible synergies between Lululemon and Walmart. Valuation part of the financial performance, we did compare four companies: Lululemon, Under Armour, Nike, and Walmart. Compared the revenue growth, the ratios of profitability, leverage ratios, liquidity, and valuation ratios. You can easily see that the Lululemon basically outperforms most of the competitors in terms of all the ratios of profitability, leverage, liquidity, as well as the valuation. Close second was basically Nike. In this, the yellow highlights in the bottom part highlights the first ranking, that's Lululemon, and the green, the second one was basically Nike all the way around. Coming on the valuation of stock performance, we did look at the 5-year performance for all of the Lululemon, Nike, Under Armour, Walmart, and as you can see, Lululemon has been pretty much outperforming its peers, specifically in 2018 onwards. Under Armour, however, has gone down from 2016 based on the factors unknown. The next one we have is the valuation part. We did the first place on the top you see is the sources of beta for Lululemon. The sources include from Y-Chart all the way through Yahoo Finance. We chose a value of 0.1511, which looked more credible of the sources we selected. We also created a sensitivity analysis. That's the table number 2 that you see, to incorporate all the beta values obtained. This was used to calculate the WACC, or the working actual average cost of capital, the weighted average cost of capital, sorry. Our discounted cash flow model or calculations will use the WACC of 5.56% for a return expected equity of 5.56% on a beta of 0.511 value. It's important to note that Lululemon has basically no debt. Table on the right shows WACC. Here our expected return of the debt was 4.55%, tax rate 21%, return on equity 5.56%, and the risk-free return on the 30-year government bonds was 3%. The US stock premium was taken as 5%, and the growth terminal value was taken as 3%. Next one we did was evaluation using the DCF, where you will see that we have taken across by adding earnings before interest and the tax times, so 1 minus the tax rate, plus depreciation minus capex, changes in working capital. Cash flow projection in 2019 is 200 million, and it's close to 1 billion in 2029. The second table shows the discounted cash flow based on the free cash flow forecast from the first table using a WACC of 5.56, growth rate at 3%. The analysis gave a terminal value of 38.9 billion and a present value of Lululemon stock at $225.7 billion. The next one we see again the sensitivity model and the deal premium, which shows the present value and a premium. Our DCF valuation shows a recommended offer price of $189.36, total market acquisition value of $25.75 billion, which is a 32.87% premium as of today. Valuation on the EVA. The top table shows the EVA evaluation of Lululemon, while the bottom one shows the EVA evaluation of Walmart. Lululemon EVA shows about 67% gain over the 5-year period, while Walmart only had a gain of around 11%. Coming on the synergies, we estimated an approach of taking a low estimate and a high estimate on the synergies. The realization time estimated was around 4 years. The deal premium was estimated at around 6.3 billion, which was equal to the NPV of the target. The NPV of synergies around 6.6 billion, the lower estimation and the 12.8 billion on the higher estimation side. The estimated NPV for the acquired rate is close to 280 million to $6.4 billion based on the synergy valuation estimate. In conclusion, the NPV synergies are higher than the premium. So we basically recommend the acquisition of Lululemon. Coming on the sources of value, in estimating the synergy values, we considered the synergies. There's a potential of increase in cash flow by building Lululemon. By buying Lululemon, it has predicted cash flow to increase by 38% by 2023. Walmart revenue growth prediction is a smaller number. Lululemon expected to grow its revenue around 7.8% before the buyout. So considering the increased traffic, synergies, the revenue is expected to grow by 10% conservatively. Walmart will also see the SG&A, HR, IT, COGS, and other savings along with the taxes going forward. Intangible value is realized by retaining the employees and how they know to get the internal knowledge of the organization and how they serve the customers through the best business practices. Sources of risk. The first acquisition risk is the brand dilution of Lululemon. Currently it offers prices premium products at high income sectors. Walmart serves middle order income families. This may dilute Lululemon's premium brand quality and value. Second one is risk of quality of Lululemon products. Walmart's engagement in the supply chain on Lululemon may, with and handling of the vendors, might dilute or impact the sourcing of items from existing vendors. The third risk relates to the reduced revenue streams from the purchasing power of the Walmart customers. Many consumers go to Walmart stores considering its low prices. Walmart turnaround of the inventory will increase, reducing Walmart's available cash and weakening one of the Walmart's competitive strengths. Fourth risk is overestimation of Lululemon's valuation. Certain factors, if like beta, estimated cash flow, and growth rate, have a large impact on the DCF valuation of the company. If overestimated, Walmart shareholders will be paying more. Finally, again, the overestimation of synergies. If the synergies don't materialize for evaluation, the Walmart shareholders will be basically at a potential loss. Financing options, considering everything, we estimate a 25.75 billion payout, 20% cash, 50% bonds, stocks for 30%. The Walmart price as of March 8 is 97.59, and with this approach, Walmart should be still able to maintain its investment grade rating. Part F, individual analysis. If someone had invested 50,000 in Walmart, basically 5 years ago, after the announcement, that investment would have amounted to $63,461. While for Lululemon, any investment of $50,000 5 years ago would have resulted in $186,732 after the 30% expected 30% jump. This 30% jump again is a small blip. Shares may stabilize here and there, but this is what we expect after the announcement. The valuation will be coming across. Last is conclusion. We conclude it's $800 to buy Lululemon at $189.36 per share. Indicates a price premium of 32.87 to the price of Lululemon as of March 8, 2019. This estimate is basically covers the expected price jump, and it may or may not sustain, in the longer period of the time. We are now open for any questions and follow-ups. Thank you very much.